So what do you want first? Do you want the good news or the bad news? Let's go ahead and do the good news first, okay? So Apple beats by 13 cents, and they beat on revenue by $1.44 billion. And now that right there, wow. Let's just take a moment and just look at that. They beat revenue estimates by $1.44 billion. You know, how many companies out there aren't even worth, $1 billion? And Apple comes out and beats by 1.44 billion. So they also quarter four GAAP EPS of 291, that beat by 13 cents. So a very nice all around beat. Then Apple also declared a 73-cent quarterly dividend, which is in line with the previous dividend. So their forward yield is 1.31%. I've kind of been pounding the table wishing Apple would up their dividend for a few quarters now, but they don't seem interested in doing that. And now here is the negative news. Apple down 7% on soft guidance. So Apple dropped 6.8% on quarter four results. Like I said, that beat on EPS and revenue estimates, with revenue up to 20% year over year. The report comes after the iPhone XS and XS Max releases in late September, and roughly the first week of those sales appear in the quarter. Now, I want to mention this right now. This is a very good tool to learn from. So, it is very possible that a company can beat on the top line and beat on the bottom line, and the stock price can tank. Like I said, that's why in all of my live chats, I'm always like, let's wait and see what kind of guidance we get. Because really and truly, guidance is more important than a beat. As long as your guidance keeps moving up and you keep setting the bar higher and higher, obviously, yes, you do want to beat on the top and bottom line, but in my opinion, guidance impacts the stock price more than, EPS or revenue. So I just want to touch on a few of these things, guys. Quarter one guidance, holiday quarter, has revenue from $89 billion to $93 billion, and the consensus was 92.88. So gross margin from 38% to 38.5%. iPhone, the shipments were 46.9 million at a consensus of 47.5 million, and the revenue was 37.18 billion. So they beat the consensus there. And the ASP, $793, and the consensus was $750. iPad. Okay, so iPad, we'll talk about that here in a moment. So shipments of 9.7 million with a consensus of 10.53 million. They fell short. Revenue, 4.08 billion. The consensus was 4.62 billion. Okay, now let's stop for just a moment and talk about that. I feel like the iPad really lost a lot of its stay power back at the end of 2016 when the big iPhone got released. Now, this is my personal experience, but I also know several people and family members who also pretty much reacted the same way. But when the iPhone 7 and the iPhone 7 Plus came out, it seems like I pretty much stopped using my tablet overnight, and everyone in my family and all of my friends stopped using their tablet almost overnight. And to be honest with you, I barely use mine now. Very, very rarely. Okay, so I'm always on my Mac or I'm always on my iPhone. I use the iPad for some in-between things, but very, very infrequently. So maybe Apple needs to chill on the iPads a little bit, because I don't think it is the most hottest item right now. Then right down here, guys, Mac. So the shipments of 5.3 million blew the consensus out at 4.87 million, and the revenue of 7.4 billion with a consensus of 6.92 billion. So they're doing really good on Macs, and they're doing really good on iPhones. And so how did the stock react to this revenue, or this quarterly report, guys? And right here, they closed at $222 a share, up $3 on the day. And they lost $14 in after hours. So they're down about 7%. And that's where the market stopped ticking at. I got the 3-month chart. pulled up on Apple, guys, and nowhere in this 3-month time period do I see a place where Apple was under $200 a share. Even on this big pullback we got over the past couple of weeks, Apple really held its level pretty well and did not get beat up nearly as bad as most of the other big tech companies did. So I'm just going to tell you my game plan. This is how I'm going to play Apple. So I own Apple in 3 different portfolios. I have a position in Apple in my retirement IRA, and I also have 2 positions in both of my M1 finance portfolios, including the one I manage here on this channel. So my game plan, I have no plans to add any positions of Apple to my retirement IRA. However, if Apple does slip under $200 a share, I will probably add on the M1 finance portfolio that I manage here, and the Roth IRA I also have. And guys, Apple at under $200, you could even trade that if you wanted to. That would be a very safe trade, you know. Like I say, I think there will be a little bit of near-term pain, but I would not even be surprised if Apple's stock price was almost fully recovered by midday tomorrow or maybe early next week. So, you know, Apple's still the best company in the world, and you know, this was a minor setback. They always adjust and they always push forward. So thanks for watching the video, guys. I hope you enjoyed it.